Now, let's get to the part that I love the most when we start talking about the dollars and cents and the theory that goes behind how me, as a professional trader with a firm, makes money both for myself and for my clients. So, I came from London to New York in the summer of 2019. Mm, let's say June of 2019. And I was holding a round of meetings with a bunch of proprietary hedge funds and proprietary firms in New York that led me to having a number of open conversations about where the future of the uh, equity markets and professional traders would be going. And so I said to myself, you know what? I would like to conduct some further due diligence, some further business investigation in my own homeland of Trinidad and Tobago. And I got to having some discussions with some key people, and I was very happy to be invited to have a chat with the number one and number two largest conglomerates in the Caribbean. They are Ansa Macau Group of Companies and Massey Stores. You go anywhere in the Caribbean, you ask anyone about Ansa Macau, you ask anyone about Massey, you know them right off the bat. And so I just want to point out the follow up of a meeting that I had with them, and I sent them an email after that meeting. So after having a very productive meeting with the head of the investment department of Ansa McCall and the head of their wealth management department, so I had a really good meeting with the head of the investment department of Ansa McCall. Um, the head of their wealth management division was also there. We had a really, really lovely discussion. And following that, I sent them this email. You can see here their names. And you can see I sent this at Wednesday on that is July 24th, 2019 at 6:32 a.m. Yes, I get up pretty early and I do send emails at that time. So I essentially gave them one investment idea that I had already vetted and done the research on myself and was recommending to other clients that I was working with. I lay out the whole thesis for the investment idea here, as you can see, fairly long and comprehensive email. Now, what I'm going to take you guys through is just this little section here explaining essentially how much money they would have had to put out, what their possible return was, and what their risk is. Because at the end of the day, that's how investments are measured. How much do I have to risk? What is my chance of loss? How much do I chance? How much do I stand to gain? And so let's talk about it. The trade that I suggested to them, they would have had to put up $2 million US as margin based on the probabilities that I had calculated. They had a 71% chance of losing not a dime. They had a 68 chance of achieving a maximum profit. And we're going to go back to explain what their maximum profit was in this instance. There was a 21% chance of max loss. 21% chance, 1 in 5 chance that they could have lost everything. However, because the system and the vehicles that I trade are liquid, at any point in time, we could have gotten easily in or out of the trade. So if we felt like the trade was going against us, we could have simply exited the position and move on to the next one. And now to the last line that most people are interested in, 510,000 US. So the time frame was from, let's say, for example, if they took that trade the very next day, let's say for some reason their investment team did their research very quickly and found that yes, this idea is actually pretty excellent, and we're going to put some money behind it. The recommended time frame for the trade was 6 months till December. Let's see, till December December 19th, sorry, December 20th, the third Friday in the month of December. So from the 24th of July to the 20th of December was the time frame for the trade that I highlighted, which is actually not 6 months. It's just about a little over 5 months and a week, perhaps. So their risk was 2 million. They stood to gain 510,000. Let's look and see. Let me show you guys exactly what I was recommending to them. I said you need to sell the 270, 250 put vertical spread. And you could have done that for a credit of $5.10. Now, because every contract represents 100 shares of the security that we're looking to trade, in this case it is Illumina, ILMN, on the US stock exchange. When you see 510 credit here, it actually refers to a credit of, for every contract you have to multiply this by 100. So for every contract of this 1000 that you see here, it is actually, you're going to be receiving 510 dollars. So $510 times 10 times 1000 is $510,000. So let's fast forward to December, what are we today? So December the 11th, and let's see what has happened with that position. So we're taking a look here at the chart of Illumina. This is a 1-year daily chart. Let me go back out so you guys can see that. And today is December the 11th at 2:40 p.m. So we're taking a chart at Illumina, a look at the chart of Illumina, and I'm just gonna zoom in a bit so you guys can see a bit better. And so in August, in fact, on the 24th, when I sent them that email, let me go to the exact date, August 24th. Illumina was trading at just around, the low of the day was 278. So it was trading at 278, and I was recommending the 270, 250, what is known as bull put spread. I'll give you guys an example as to why in particular I was recommending that. Looking at this area of price action, I could tell that the 270 level was going to be very important because it had previously acted as a pivotal point of buying demand for institutions. Where institutions are interested in a certain security, you want to be interested in that security at that level also. Or at the very least, you want to be in you'll be very well off to observe what happens to price when it comes to that level. So when I saw Illumina come down to this 278, 276 region, I said, you know what? This 270 level has been very important in the past. Let us make an educated guess. Let us create a hypothesis. Let us create a trade that allows us to profit from the fact that we know institutions have shown up at this point in the future whilst putting time on our sides. And so that's effectively what I did. So I sold the 270, 250 put spread. So in the event that the stock did break down through 270, I had some cushion up to the 250 level. So let's look at what happened to that trade that I recommended. We're going to pull up the chart to show you exactly how day by day the values either increased or decreased. So this is a chart of that particular investment idea that I gave to Ansa McCall. And I recommended, again, near the end of August, I won't say who exactly is this person, hint, hint, who sold 500, approximately 500 of this 270, 250 put vertical limit, put vertical spread at a price of, let's call it on average $13. All right, so let's do the math. Let's do the math for a second. So let's do the math together. So the volume on this particular strike spread, as you can see, 532. 532 times, how much did we buy it for? On average, the fill price was around $13. Now remember we said $13 means $13 per share, and because one contract represents 100 shares, it is actually 130, 1300 when you multiply it by 100. So it's 532 times 1300. So the premium we collected was $691,600. Now, how much margin did we have to put up in order to enter that trade? And by margin, I simply mean collateral. So what was the collateral that we needed to give to our market makers in order for them to put us into the trade? So keep an eye on that 691,000 figure. This is our maximum profit. If Illumina finished above 270 by December 20th, our maximum profit would be 691,000. $691,000 would be our profit if Illumina stayed above 270. As you can see, on December 11th at 246, Illumina is 320.96. A very long way from 270, but most importantly, we're going to show you what the price of that security is now worth. So we had to put up a 20 wide spread 532 times. So 532 times 2,000. We had to put up 1,064,000. So in order to get into this trade, we had to put up 1,064,000 in margin or collateral. Let's see where the value of that security that we sold now is. So we sold that security for approximately $13, and it is now on December 11th worth approximately 18 cents. So if we take a look at this in a graphical form,